Hello traders. Welcome. I'm Erica Trina, your host from Sen Securities. Join me as I take you through the story of a Forex icon, George Soros, and the events surrounding the Black Wednesday. The story of the man who broke the Bank of England is one of financial audacity, global economics, and immense personal ambition. This narrative centers on George Soros, a Hungarian-born American investor, philanthropist, and one of the most successful financiers of all time. The events leading to and following the crisis, famously known as Black Wednesday, are critical in understanding how a single individual, leveraging astute financial insights and bold strategies, could challenge and ultimately topple a major economic institution. To understand the events that culminated on the 16th of September 1992, known as Black Wednesday, one must first grasp the economic context of the time. The early 1990s were marked by significant economic turbulence across Europe. The United Kingdom, in particular, was grappling with high inflation rates and a struggling economy. In response to these challenges, the UK government decided to join the European exchange rate mechanism in October 1990. The ERM was designed to reduce exchange rate variability and achieve monetary stability in Europe in preparation for the economic and monetary union, and the introduction of a single currency, the euro. Joining the ERM meant that the British pound sterling had to maintain a fixed exchange rate within a narrow band relative to the Deutsche Mark, which was the strongest currency in the system at the time. The British government set the pound to be pegged at an exchange rate of 2.95 Deutsche Marks to £1, committing to intervene in the foreign exchange markets to maintain this rate. This decision, while aimed at fostering economic stability and lowering inflation, was fraught with risks, particularly given the UK's economic condition. The British economy was in recession, marked by declining output and rising unemployment. Furthermore, inflation was higher than in Germany, which meant that British interest rates needed to be higher than German rates to attract investors to hold pounds rather than Deutsche Marks. High interest rates, however, worsened the recession by increasing the cost of borrowing for businesses and consumers. This set the stage for a growing conflict between maintaining the fixed exchange rate and managing the domestic economy. By this time, George Soros, a financier with a deep understanding of global financial markets and a keen sense for identifying economic imbalances, had already established himself as a formidable investor through his hedge fund, the Quantum Fund, which he founded in 1973. By the early 1990s, Soros had accumulated significant wealth and influence in financial circles. He observed the UK's predicament and recognized an opportunity. Soros and his team at the Quantum Fund began to take massive short positions against the pound in the months leading up to Black Wednesday. Short selling is a strategy where an investor borrows a currency, sells it at the current market price, and then repurchases it later at a lower price, pocketing the difference as profit. Soros bet that the British government would ultimately be forced to devalue the pound due to the untenable economic situation. There were numerous factors at play that contributed to Soros's confidence. First, the UK was struggling with a large current account deficit, meaning it was importing more than it was exporting, which put downward pressure on the pound. Second, German reunification after the fall of the Berlin Wall had led to fiscal expansion in Germany, prompting the Bundesbank, Germany's central bank, to raise interest rates to control inflation. This, in turn, made it difficult for the UK to maintain high interest rates without further damaging its economy. As the UK government continued to defend the pound, Soros and other speculators increased their short positions. The pressure on the pound intensified. On the 16th of September 1992, the British government made a final attempt to stabilise the currency. The Bank of England spent billions of pounds buying up sterling in the foreign exchange markets and raised interest rates from 10% to 12%, and then to 15%, in a desperate bid to attract investors. However, These measures were futile in the face of overwhelming speculative pressure. By the end of the day, the British government capitulated and announced that the pound would leave the ERM and be allowed to float freely. The pound immediately plummeted in value, falling by 15% against the Deutsche Mark and 25% against the US dollar in the subsequent weeks. Soros's quantum fund reportedly made an estimated $1 billion in profit from its short positions against the sterling pound, earning Soros the moniker "the man who broke the Bank of England." The repercussions of Black Wednesday were significant and far-reaching. For the UK, the immediate aftermath was economically painful, but it also marked the beginning of a recovery. The devaluation of the pound made British exports cheaper and more competitive internationally, which helped to stimulate economic growth. Additionally, the British government gained greater control over its monetary policy, no longer constrained by the need to maintain a fixed exchange rate within the ERM. Politically, Black Wednesday was a disaster for the ruling Conservative Party. The event severely damaged the credibility of the Prime Minister, John Major, and his government, contributing to a loss of public confidence, and setting the stage for the Labour Party's landslide victory in the 1997 general election. The economic fallout and political instability highlighted the challenges and risks of maintaining fixed exchange rates in the face of economic divergence between member countries. For George Soros, Black Wednesday cemented his reputation as one of the most astute and daring investors in history. His success was not merely a result of bold risk-taking, it was underpinned by rigorous analysis and a deep understanding of macroeconomic trends. Soros's ability to foresee the unsustainability of the pound's fixed exchange rate, coupled with his willingness to act decisively on his convictions, exemplified the power and influence that savvy investors can wield in global financial markets. In the broader context of international finance, Black Wednesday served as a cautionary tale about the limitations of fixed exchange rate systems. It demonstrated the vulnerability of such systems to speculative attacks, especially when underlying economic fundamentals are misaligned. The episode also highlighted the need for central banks and governments to maintain flexibility in their economic policies and to be wary of the potential for market forces to overwhelm policy measures. In the years following Black Wednesday, the European Union moved forward with its plans for greater economic integration, culminating in the introduction of the euro in 1999. The experience of the ERM crisis informed the design of the Eurozone's monetary framework, emphasizing the importance of economic convergence and fiscal discipline among member states. However, the Eurozone has faced its own challenges, particularly during the sovereign debt crisis of the early 2010s, underscoring the complexities of managing a single currency across diverse economies. George Soros continued to be an influential figure in finance and philanthropy. He used his wealth to support a range of causes, including education, human rights, and democracy promotion through his Open Society foundations. Soros remained an active commentator on global economic and political issues, advocating for policies that he believed would promote stability and prosperity. I conclude on this note: the story of the man who broke the Bank of England is a compelling narrative of financial strategy, economic policy, and the interplay between markets and governments. George Soros's actions on Black Wednesday were a masterclass in leveraging market dynamics and economic insights to achieve extraordinary results. The events of the 16th of September 1992 and their aftermath offer valuable lessons about the importance of sound economic management, the power of financial markets, and the impact of individual actors on the global stage. As such, the legacy of Black Wednesday endures, both as a historical milestone and as a reminder of the intricate dance between economic policy and forex market forces. On behalf of Sen Securities, I'm Erica Trina. Thank you.